Welcome back to EDS, and in this video I'm going to show you how to manage your options portfolio like a professional. This is specifically going to be for if you are writing options contracts, which is what we do here at EDS. So I'm going to show you step by step. The first thing is obviously you need to pull up your portfolio. This is our portfolio. This is one of our example small portfolios. We're not really paying too much attention to diversification in this portfolio, although our portfolio is fairly diverse for its size. We're not making a major focus on that. It's more just for example purposes. I'm going to show you how to manage things on a position by position level as opposed to a portfolio level. So if you did have a larger portfolio, or if this was your actual real portfolio, you just need to make sure that your theta is in check. You want to make sure that everything is nice and diverse, and then you want to basically be going through on a position level basis, which is what I'm going to show you here. So we've added some new positions in since last week. It is a Sunday, the market is closed. We just do a little portfolio review on a Sunday. We've got a couple of positions that are in the money. We've got a couple of positions that are newer, that are working quite well. We've taken some positions off in profit as well. So we're just going to go through one by one. So we've got AVGO here, which is an iron condor. We are currently 29.1% of our way to max profit. It has an IV rank of 38.2. We've been in this position for 10 days. We've still got 40 days left to go. And just a heads up, in this video, there is going to be a lot of patience involved. And you'll see what I mean. So this is AVGO. This is what the position currently looks like. We have our short call up here at 270, and we have our short put down here at 210, and then we have our long contracts covering $5 wide on either side. As we can see, prices in the middle of our range. Volatility has come out of the market a little bit since we initially put the position on, which is working quite well for us. And essentially there is nothing to do here. We can take profit anywhere now, or when market opens. We'll just see where price is when market opens, but we could take profit anytime, whenever we want. 30-40% is a respectable amount of profit to take off of the table. We won't go above 50%. As a general rule of thumb, we don't go above 50%, but anywhere up to 50% is fine. So we'll see how the market opens on Monday, and we'll potentially be looking to take this off and bank some nice profit on this position. That's AVGO. Next up, we've got GDX. GDX is a strangle, and it has a IV rank of 46.8. We've been in this position for 12 days, and we've got 40 days left on this contract. So if we just have a look at GDX, this is what GDX currently looks like. Price has come up a little bit, but on Friday we did have a bit of a sell-off, which has brought us closer back into the middle of the range, kind of rebalancing our deltas a little bit. So there really isn't much to do with GDX. We just need to wait, let volatility come out of the market, let volatility contract a little bit, let theta decay away the value of the contracts a little bit more. And overall, there really isn't anything to do on GDX. Like I said, patience is going to be a big thing when you are managing your positions. So nothing to do here. Everything looks all good, even though we are in a slight drawdown of negative 7.7%. We're basically at break even. If your strikes haven't been breached, which our strikes haven't been breached, there's nothing to do. Your position is working, so just let it keep working. If you start adjusting it too much and you know, messing about with things, that's when you know, you can end up over trading and get yourself into a bit of a situation. So next up we have Macy's. Again, Macy's is another strangle, hovering around break even at about negative 12%. We've been in this position for 12 days, 40 days left on the contract. So let's have a look at the chart. So as we can see here, price has moved down a little bit. But again, we are still in the range, so there's nothing really to do here. If we have a look at our net deltas on Macy's, our net deltas is currently 23.97. So if this does get to around about 30, and the same with GDX, if it gets to around about 30, What we may look to do is roll the untested side, kind of rebalance our deltas a little bit and get back to delta neutral, but that is completely optional. That is more of an advanced thing, but we will see how market opens on Monday to see if we need to make any adjustments, and we'll look to reduce our delta exposure by about 50%, maybe a little bit less. It just depends on what's happening in the market and what strikes we have available to choose from and how much premium we can collect at the time. But again, right now there is absolutely nothing to do with Macy's. Everything is working perfectly. We have the soybean futures /ZS, which is great for smaller portfolios. It is an iron condor. We're currently sitting at around negative 17% on this position, which is near enough break even. We have got a negative 112 deltas, which might seem like quite a lot. However, with it being an iron condor, this is a covered position, so you don't really need to be making adjustments to kind of balance out your deltas because your risk is defined on entry. It has an IV rank of 52.5. We've been in this position for 5 days. We've still got 40 days left on the contract. Let's just mark out our short strikes on ZS, so 940 and 1040. Let's do that real quick. So 940 940 is our short put, and 1040 is our short call. So if we have a look here at ZS has had a pretty sharp spike upwards on Friday, which is why we're in a slight negative drawdown on this position. However, there's absolutely nothing to worry about here. We haven't breached our strikes, and even if we had, this is a defined risk position. So it's important to have a mix of naked positions and covered positions, or also known as defined risk positions and undefined risk positions, because the way you manage them is different. So this is a defined risk position, and you can sort of roll the untested side. If you are going to do that, I really wouldn't do that until your strikes have been breached, and in this case our strikes have not been breached, so there's nothing to do. However, I personally tend to not make any adjustments when it comes to defined risk positions, simply because our risk is defined on entry. We don't have an unlimited loss potential. We know what our max loss is. And anytime you do make an adjustment on a defined risk position, you're essentially lowering your probabilities of success. So let's just say if price did move up to say 1050, price can absolutely still come back within our range at the point of expiration, and we might essentially end up shooting ourselves in the foot if we roll too aggressively, for example. And I am of the belief that nobody really knows what the market's going to do or where it's going to go. We just simply manage risk. Basically, we are risk managers, and our risk has been managed on entry. So with the soybean futures, there really isn't nothing to do here. Again, it's just a game of waiting. Now we get to our in the money positions: the euro futures, Canadian dollar futures, and MVO. So we have our euro futures here. We are in a little bit of a drawdown on the euro futures, negative 72.5%, which might seem like a lot, but for a defined risk position, it's actually not that much, because you will win more often than you lose. So if you're, let's say for example, if you're in a drawdown of 100%, that means it's basically a 1-to-1, and you will win more than you lose. So it's still profitable overall. It has an IV rank of 61.7. We've been in this position for 38 days. We've still got 26 days left on the contract, so we've still got plenty of time. So this is what the position looks like on the charts. We've only just breached it slightly. Price has sort of come back in, and then it's gone back out again. So we've still got plenty of time left on this position. So I'm not really too worried. We can roll the call side down, but as I just explained with ZS in that previous example, you can do it. There's nothing wrong with it. It's just a matter of personal preference. I personally am not going to. I could do it, just collect a bit more premium, reduce risk. However, you will then reduce your probabilities of success. So as long as you define your position size on entry, you define your max risk, and you make sure that that everything is in check. You don't over leverage yourself on entry. And when it comes to defined risk positions, it's pretty much just a set and forget it. It's a very easy trade to manage. So with the Euro futures, we're literally just going to hope it comes back into the range. If it doesn't, it's absolutely fine. Our risk is defined. It's not a problem. So that's the Euro futures. Canadian dollar futures, only one leg is in the money, so we're closer to a recovery on the Canadian dollar futures. Again, we're sitting at around about 80% drawdown on this position. We have an IV rank of 89.3, still quite high. Hopefully we can see a contraction in the market and volatility. We've been in this position for 44 days. We've still got 26 days left on the contract, and this is what the position looks like. So we seem to be in this little consolidation area, just under our short put. Price did try to go back up over 0.7, which is where our short put is, and then price came back down. So we're still within the consolidation range. And again, this is a very similar situation to the Euro futures position. And it's just a game of simply waiting to see. We've still got plenty of time left on the position. Price hasn't really run away from us too much. It's just outside our strike. So again, this is just a waiting game. Our risk is defined on entry. There's nothing really to do here. Remember, when you are writing options contracts, we typically have 70, 80, sometimes 90% probability of success, but that does mean 10, 20, 30% of the time positions will move against you. And this is an example of one of the times where position might move against you. So we still got plenty of time left, so I'm not really too worried about Canadian dollar futures. MVO, pretty much we've written MVO off at this point. We are down about 124%, which still isn't too much really in the grand scheme of things, but of course nobody wants to see that in their portfolio. It is a defined risk position, so we're not worried about if this position moves against us. We've defined our risk on entry. IV rank is 54.8, which has come down since we initially put the position on by about half. We've been in this position for 46 days, 5 days left on this on this position. So NVO is a biotech company. They announced a product or something that didn't really go too well, and we had this big gap down overnight, which is what screwed this position up. And that is just the risk that you take sometimes, because volatility, or implied volatility, was extremely high. So we did get paid a very nice and respectable premium to take this risk. It's just this time it just hasn't really worked out. However, having said that, anything can happen. There's still 5 days left on the contract. Price hasn't completely gone away from us. It is still in this consolidation range. If we get couple of green bars in a row, we'll be back in the range. Also, we don't need to be entirely back in the range to actually make money, because remember, if our short put is at 95, our long put is at 90. This is $5 wide, so anything below 90, we're going to take our max loss. Anything above 90, anything between 90 and 95, we'll take a loss, but not a max loss. It just depends on where price lands. And then you have to remember that we also collected a premium up front of $2.10, which was very, very nice. Quite a good premium for this position. So you have to remember, so you have to take that off from our 95 price, which will land us at 92 point, what was it again? 2.1. So 2.1 minus 95 will give us 92.9. So 92.9 is going to land us around here. So this 92.9 is actually our break even. So we don't even need price to go over 95. We just need price to go over 92.9 and we'll be making money. And the closer it gets to 92.9, the less of a loss that we take. So just because price has breached your strike, it doesn't mean that it's game over. It's far from it. We very much are still in the game. I personally don't think that it's very likely that we're gonna be able to, turn this position around, just based on, what it's been doing. It's kind of just stuck in this little range at the moment. However, that's not to say that it can't, and recoveries do happen quite often in the market, especially if the overall market has been down recently because we've had such a strong rally. So the whole market's pretty beat up at the moment. So what comes down must go up. When it does that, we don't know. It's not our job to know. It's our job to manage risk. So the point being, it's not looking good right now for MVO. However, we've not lost hope, and even if it doesn't end well for us, it's absolutely not a problem whatsoever, because we have defined our risk on entry. So again, nothing to worry about here. And that's basically going to sum up the entire portfolio. You want to have a nice mix of defined risk positions and undefined risk positions. This is a very small portfolio. If this was, say, a couple $100,000 or more, you would want to have much more positions than this, just to give yourself the best chance of the odds working out in your favor. You want to have as many occurrences as possible. You want to let the averages play out. You want to let things play out. You want to mitigate your exposure to short-term variance as much as possible. So there is one other thing you need to know, because you don't just want to blindly put positions on. You want to make sure that your position sizing is in check. You want to make sure that your buying power requirements, or you're not overextending yourself on how much buying power you're allocating to each position. So what we've done is we've created a free position sizing template that's available for everybody to use and get a hold of. Link will be in the description. Just click that button there and it will take you over to this spreadsheet. And the way it works is you enter in the size of your portfolio. So say if it's $10,000, you then enter in whatever the current VIX level is, and then everything below will be automatically worked out for you. It will tell you the maximum amount of buying power to allocate to a single defined risk position, undefined risk position, how much of your portfolio in general you should be allocating to short premium strategies. And as long as you follow this, you'll be absolutely fine over the long run. You won't have any issues. So again, link for that spreadsheet will be in the description. If you want to learn in more detail about what we do and how we do it, the link will be in the description for EDS Premium. Just click on this button here. Get yourself signed up. Inside you will have access to our portfolios that will allow you to see the positions that we're placing, how we're managing risk, how we're making adjustments, all in real time. There's also a full course, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. It is a private community, so you can speak with myself directly or with other like-minded individuals if you get stuck at any point. And there's also a 100% money-back guarantee. So once you've been through the full course and followed some of our trades, if after 6 months you haven't been profitable, then we will work with you for free until you are, or you can simply request a full refund. So it's completely risk-free on your part. It's £1 a month to join. It's super cheap because we've just launched. Very soon the price will be increasing. However, once you're in, the price is locked in for life. So you are rewarded for getting in early. And the aim of EDS Premium is to teach you the skill of what to do and how to do it, so that you're not reliant on us, you're not reliant on anybody else. You know what to do yourself, and you've learned the skill, and it's something no one can take away from you, and it's something you can do for the rest of your life. We aim to get you to that point within 6 to 12 months. You are always welcome to stay and be a part of the community, but within 6 to 12 months you should know what you're doing and you'll be good to go. So with that being said, I will see you all inside.